September 16th, 1992. A day forever etched in financial history as Black Wednesday. Inside the ultra-secure vaults of the Bank of England, one of the most powerful financial institutions on Earth, panic was spreading like a virus. The British pound was collapsing, and the government was bleeding billions of dollars every single hour to save it. But this wasn't a natural economic disaster. It was a calculated, cold-blooded attack. On the other side of the Atlantic, inside a dim luxury office in New York, a single man was sitting quietly, watching the chaos unfold on his computer screens. His name was George Soros, and he had just bet an astronomical $10 billion against the entire British Empire. By the time the sun went down, the Bank of England surrendered. The British economy was shattered, and George Soros walked away with a staggering $1 billion in profit in a single 24-hour period. How did a single private investor bring a global superpower to its knees? What was the fatal mathematical flaw inside the European financial system that Soros exploited? Today, we decode the greatest high-stakes gamble in history, the mechanics of market manipulation, and the man who broke the Bank of England. Welcome to Moneta. To understand how one man defeated an empire, we must first look at the system that made it possible. In the late 1980s, European nations were preparing for a massive historical shift, the creation of a single European currency. To achieve this, they created a strict system called the European Exchange Rate Mechanism, or ERM. The rule of the ERM was simple but incredibly rigid. All European currencies had to be tied directly to each other. They could not float freely. And the powerhouse anchor of this entire system was Germany, with its incredibly strong Deutsche Mark. In 1990, the United Kingdom decided to join this system. But there was a fundamental problem from day one. The British economy was weak, inflation was sky-high, and unemployment was rising. Mathematically, the British pound was vastly overvalued compared to the German mark. Behind closed doors, a silent, vicious war was already raging between London and Frankfurt before Soros even placed his first bet. The British Prime Minister, John Major, and his Chancellor, Norman Lamont, were desperately begging the German central bank, the Bundesbank, to lower their interest rates. The British economy was bleeding, and Germany held the tourniquet. But Germany had its own massive historic challenge, the reunification of East and West Germany. To fight their own internal inflation, the Bundesbank completely ignored Britain's pleas and kept German interest rates sky-high. This was the exact moment the trap snapped shut. Every single day, the British government tried to defend the pound. They were losing a war against economic gravity. They were burning through their national gold and dollar reserves just to buy their own currency on the open market. It was a massive, unsustainable artificial support system. The Bank of England was essentially broadcasting its fatal vulnerability to the entire global financial elite. This is where George Soros enters the story. Soros wasn't just a regular trader, he was a financial predator who looked for systemic structural flaws. Through his investment fund, the Quantum Fund, Soros and his brilliant strategist, Stanley Druckenmiller, began analyzing the British economy. They quickly realized the British government was trapped, in a lethal mathematical illusion. To keep the pound tied to the German mark, the UK was forced to keep interest rates artificially high. This was suffocating British businesses and destroying ordinary citizens. Soros knew the British government could not maintain this lie forever. He saw a definitive truth. The pound had to drop. So he decided to force their hand. Soros gave his team a legendary directive: go for the jugular. He began executing a massive financial strategy known as short selling. Soros didn't just sell his own money. He went to global megabanks and borrowed billions of British pounds. He immediately sold those borrowed pounds on the open market, converting them into German marks and US dollars. By flooded the market with billions of unwanted pounds, Soros single-handedly started driving the price of the British currency straight down into the abyss. September 16th, 1992. The British government woke up to an absolute financial nightmare. Soros's massive short positions had triggered a global avalanche. Every major hedge fund and bank in the world saw what Soros was doing and joined the attack. Everyone was selling the pound. The Bank of England fought back with desperate fury. In a single morning, they bought £2 billion using their historic gold reserves. It did nothing. Next, the government raised interest rates from 10% to 12%. Soros didn't blink. Hours later, they raised them again to a staggering 15%. By 11 a.m. on that fateful Wednesday, the tension inside number 11 Downing Street had reached a breaking point. The Chancellor, Norman Lamont, was on the phone every 10 minutes, watching billions of pounds vanish into thin air. Raising interest rates to 12% had failed to stop the bleeding. The market knew the government was bluffing. In a desperate, unprecedented move, Lamont authorized another emergency interest rate hike, pushing it to a mind-blowing 15% in a single afternoon. This was a nuclear option that would have destroyed ordinary British homeowners and skyrocketed mortgage payments overnight. But the global markets didn't care. Soros looked at the 15% interest rate and smiled. He knew this wasn't a sign of strength. It was the final, frantic gasp of a dying giant. Instead of backing down, Soros doubled his short positions. The Quantum Fund was now throwing everything they had into the fire, accelerating the complete and total depletion of Britain's national wealth. At 7:40 p.m. that evening, the British government realized they were completely out of ammunition. Their reserves were dry, and their economy was on the brink of total destruction. They surrendered. The United Kingdom announced it was leaving the ERM and allowing the pound to crash. The currency immediately dropped 15% against the German mark. For the British taxpayers, it was a multi-billion-dollar disaster. But for George Soros, it was the ultimate payday. He bought back the now worthless pounds at a massive discount, paid back the banks he borrowed from, and pocketed a cool $1 billion in clean profit. In 24 hours, his wealth and global power became legendary. A fragile, artificial system that was destined to fail. Today, the global economy is filled with similar hidden fault lines, fragile systems, and mega investors waiting for the perfect moment to strike. If you want to decode the true history of capital, power, and the hidden mechanics that rule our world, make sure you don't leave your financial future to chance. Subscribe to Moneta, hit the bell icon, and join us as we uncover the secrets of the global financial elite in our next chapter. Thank you for watching.